Okay, so now as we look at the Fraser Index, they break things out. Hopefully you've taken a look at this. They break things out into a number of categories. Basically, they break it out into the size of government, legal structure and property rights, access to sound money, freedom to trade internationally, and the regulation of credit, labor, and business. Now, if we compare that with what the textbook gives us, which is on the left here, we have property rights, honest government, political stability, dependable legal system, competitive and open markets. These don't map on directly. And so normally in class we would spend a fair bit of time trying to talk about how they're different. Now you'll notice that property rights in the macro definition is number 1. As I've numbered them, it would reasonably be contained in point 2 in the Fraser Index. Dependable legal system, part of that's also under legal structure and property rights. Where's sound money on the left? It's not really. How about size of government? Where's that on the left? It's also not. Freedom to trade internationally, that probably fits under competitive and open markets. Regulation of credit, labor, and business. Where's that on the left? Well, we might put that under honest government. We might put that under property rights. But again, if we want to think about what's different between these, it could just be different groups of people with different opinions. But the way I would think about it is, on the left, we have institutional causes, the underlying rules of the game and their enforcement. But it turns out measuring institutions directly is really hard because we don't just care about what rules are on the books, we also care about their enforcement. And so what the Fraser Index tries to measure, in my view, is institutional outcomes or measures of institutional outcomes. It's not so much the causal piece, although some of it will be causal, but most of it is definitely going to be related to the causes that are just kind of hard to measure. And so we may measure things that are the outcome of institutions, even if we can't measure the institutions directly. So let's talk about them a little bit. Size of government. Why does this matter? Now again, this isn't saying that we don't want government, by the way. As we've seen recently, I think we can agree we would like an effective, strong government that is very good at doing some things and doing them well. But basically, if we think about this, government consumption as a percentage of total consumption. Now again, remember what the Fraser Index is trying to measure. The Fraser Index is trying to measure economic freedom. So the more government is consuming goods and services in the economy, the less room there is for private individuals driven by the incentives and information communicated in prices. And so we're probably, if we think about the incentive to invest in and use effectively the factors of production, a larger share of government consumption, unless you're going to make the argument that government is as effective at knowing what is good for society or more effective at knowing what is good for society. Basically, government consumption is going to decrease economic freedom. And ceteris paribus, depends on what we're talking about, but ceteris paribus is probably going to decrease economic growth, or at least the incentives to invest in the factors of production. Now, transfers and subsidies as a percentage of GDP. This shouldn't come as a surprise to any of you. We can diagram a subsidy, we can diagram direct transfers. These generally are, again, going to cause typically a misallocation of resources and definitely are also going to decrease economic freedom. Government enterprises and investment. Again, there's some submeasures here, but government enterprises and investment, if we have a lot of government enterprises and investment, there's going to be less economic freedom, and there's also going to be less incentive to invest in and use effectively the factors of production. There may be greater incentive to invest in and use factors of production for government agency encouraged ends, but there's no reason to think that that is going to be anywhere near the same as using the factors of production to increase well-being. Now, top marginal tax rates also shouldn't be too surprising. We put in place larger taxes. We will end up with less incentive for people to invest in new things, to start new businesses, to work hard. Now, they break this out into a marginal income tax rate and a marginal income and payroll tax rate. There's some technical differences there. In effect, they're trying to triangulate. And lastly, we have here state ownership of assets. I think it's lastly. We'll find out in a moment. In other words, if government owns a lot of the assets in the economy, again, most of the decision to invest in factors of production is going to be driven by what government agencies want, not what is necessarily good for society. And so that'll probably result in less growth, and it will also definitely result in less economic freedom. So that's size of government. This isn't saying that we don't want government to do things. There are many things that we actually may want collective action for. We may want a national military. We might want a national response to pandemics. We may want a variety. We may want the National Guard to step in. We might want some, right? There's a variety of things. But holding those, if we could get those same, if we hold government capacity constant, we would want to get it for the lowest size of government possible. So the size of government is a bug, not a feature. The functions of government, the functions that government officials can carry out effectively, that's the feature, that's the benefit, whereas the size of government is a cost. So legal structure and property rights. Fraser breaks that down into judicial independence. So let's think about why that might matter. In other words, is the judicial branch separate from the executive and Parliament, etc.? And that's going to be important because otherwise the other branches of government are going to have a tendency to try or the politicians in other branches of government are almost certainly going to try and exert influences over the judiciary, leading to a court system that is less dependable and less clear, which introduces uncertainty into whether I can get my contract enforced or whether because I got sideways of the president, now the courts won't enforce my contract. That's definitely going to decrease people's incentive to invest in factors of production. Impartial courts. That would more be, are the courts impartial between private citizens? So you can kind of view judicial independence being, is the court system independent sufficiently of the other branches of government to be impartial in decisions between government officials and private individuals? Impartial courts, on the other hand, would more be about, do courts have an incentive to put a thumb on the scale? Do judges have an incentive to put a thumb on the scale of particular individuals, politically connected individuals? Again, if not, that will decrease the incentive. If they don't have that incentive, that would be great. If they do have a tendency to do that, if they are, in other words, not impartial, that will decrease people's incentive to invest in and use effectively the factors of production. Protection of property rights. You can read more about how they do that. That should make some sense, right? If we have property rights, but nobody protects our property rights, if I can't enforce my property rights, then again, I could have a specified property right to a factor of production, but if I can't enforce that, then I'm not going to invest in that. I'm unlikely to invest in it in the first place. We also have military interference. Is there military interference in the court system? So you could view judicial independence. I forgot a branch, although I really didn't, because that really would be under the military interference section. Do military officials get involved in the judicial process? Do they put a thumb on the scale there? Integrity of the legal system. We have legal enforcement of contracts or a lack of legal enforcement of contracts. Are there regulatory restrictions on the sale of property? Right? Hopefully it makes some sense, particularly after you read the Fraser Institute's report, that these things are going to matter. If we have restrictions on my ability to sell property, that might not seem like that would have a large impact. Of course, if it's going to be hard for me to sell my property, I'm probably going to be reluctant to buy property in the first place, thus decreasing the incentive to invest in and use effectively the factors of production. Okay. Access to sound money. Now, I'm probably going to put this under honest government to a large extent, although if we think about why would we use money, in my view, the main reason why we would use money is to make it easier to find people to trade with to enforce the exchange and to negotiate the exchange. It's not going to do a lot with enforcement, but it would help finding people and negotiating. So the main function of money is to reduce transaction costs. Now, if money fluctuates a lot in its ability to purchase goods, now this is going to be different than the exchange rate. The exchange rate, the short-term fluctuation in the rate at which different monies are exchanged, is a separate issue here. What I'm talking about is a fluctuation in the amount that it takes to buy goods generally. Now we're going to talk more about the price level later, so again, this is a bit of a preview. But we're going to talk about some pieces that are going to be relevant. One of them is going to be the money growth, the increase or decrease or the change in the amount of money in circulation. How many bills do we have in circulation? What's the total value? Now, it's a little bit more complicated than that, but that's going to be relevant because, as we're going to talk about later, the fundamental cause of long-run economic growth is institutions. We've talked about that, so that was, my brain went sideways on that one. But the underlying reason for inflation, which we may have heard about in other areas, is changes in the money supply. Now we're also going to talk about the standard deviation of inflation. So it could be that we have high inflation, but it's very predictable. If we had high inflation, but it was very predictable, it wouldn't be all that hard for us to write that into contracts. So if we knew that $1 a year from now was going to, every year it was going to be worth 10% less, then we could just build into all of our contracts now that's the opposite of inflation, it's negative inflation. Well, no, 10% less is inflation, so it's worth 10% less. That we could just build that into all of our contracts. So here what we're talking about is the standard deviation. In other words, how much does inflation bounce around? Inflation the most recent year. And then we talk about freedom to own foreign currency bank accounts. Now, in many countries, that's illegal, or there are severe restrictions on that. And in effect, the reason why that's important isn't because it's going to keep inflation from happening. It's not going to be because it keeps government officials from eroding the quality of the money. It's that it will serve as a check on their ability to do that, because if they do that too much, people will just go hold their bank accounts in foreign currency. Now, this may seem weird to a lot of Americans, but the truth of the matter is that when I was in Iraq, my bank account wasn't in dinar, and my payments were not in dinar. I got paid in US dollars, and that was true for most people there. Now, we did small money transactions in dinar, but most large transactions took place in dollars. And if you want some frame of reference for why that might be, I was there from 2010 to 2012. And 10 years previously, in 2000, the year 2000, a falafel sandwich cost a quarter of a dinar, basically 25 cents. By the time I got there, a falafel sandwich cost 250 dinar. So over the course of 10 years, it cost 10 times the number of units of currency. Now, that wasn't that people suddenly were hard up and that it was really hard to buy falafel sandwiches. It was very easy. That was a case of an increase in the price level. It was a case of inflation. Again, this is going to be really important. We're going to come back and circle back around to it when we get to the chapter on inflation. Freedom to trade internationally. Now, by the way, you're going to have to let me know if you would like me to break these up into smaller chunks, if that'll be easier for you to watch. I have a tendency to do that, but it's a little bit more of a hassle, so I'm going to keep running with it this way for now, and you can give me the feedback. Now, here we can measure taxes on international trade. Now, we should even be able to diagram this. This is what's called a tariff. And hopefully that sounds familiar to some of you. You would be able to diagram a tariff and diagram the decrease in well-being that results from it, even though it will yield an increase in domestic production. And so they measure this a couple ways: revenues from taxes, from trade taxes, the mean tariff rate, the standard deviation of the tariff rates. In other words, are they predictable? Now, that's not the only piece. We can also, in addition to tariff barriers, we have non-tariff barriers, regulatory trade barriers. So there's non-tariff trade barriers. There's compliance cost of importing and exporting. right? It takes a certain amount of time, energy, and resources to get people to fill out the forms, to get approval. There are, in the non-tariff trade barrier camp, there may be safety restrictions or other requirements. So if you think about the Canadian market, all of the goods produced there, I think, and most of the ones that are imported actually have to be labeled in both French and English. Well, that then means that companies will have to, they have to repackage things, or do they have to, right? So there's going to be some other non-tariff trade barriers of exporting or selling goods in Canada. Now, this next one's a technical piece here. The black market exchange rate is really going to be what we are going to call the free market exchange rate. Some countries run a government-guaranteed exchange rate, and then there's the one that happens on the actual black market. There's the official exchange rate, and there's the black market exchange rate. In the United States, we don't have an official exchange rate. It is the market rate, and the black market exchange rate doesn't exist for us. But even right, when I was in Iraq, again, there was the government-stated official exchange rate, which some people could go to the central bank and exchange currency at. But then there was also the exchange rate that you could actually trade dinar for dollars in the market. And those two will deviate and diverge. Controls on international capital. Can foreigners own things in the country? Are there controls on people sending their capital abroad or various things like this? Again, this is a measure of economic freedom, but it's also a measure of the incentives that people are going to have to invest in and use effectively the factors of production. I'm going to stop this here and come back to it in a moment.